Hello, everyone. Thank you for coming to the WFF Japan session. How Japan's capital markets has transformed. Is it real this time? I am Ryushiro Kodaira, editorial writer of the Nihon Keizai Shimbun, the Nikkei, Japanese newspaper company. I joined this company in 1988, immediately after graduation. So these days are remembered as a bubble economy, one of the most shining periods in Japan after the Second World War. Since the collapse of bubble economy in 1990s, unfortunately, we have seen the declining of our country. Some commercial banks and investment banks have gone bankrupt, and the reputation of Japan's capital markets have significantly fallen. Is there any possibility that Japan's markets would regain the international competitiveness and its reputation? And if there is a chance, what needs to be done? This is the subject we will discuss in about next 45 minutes. And it is my great pleasure to introduce to you three distinguished panelists today. Oki Matsumoto, Chairman of CEO of Monex Group. Keiko Tashiro, Deputy President of Daiwa Securities Group. And Yuko Kawai, CEO of Japan Digital Design. So would you introduce yourself and current development of your business one by one? First of all, Matsumoto-san, please.
Okay, thank you, Kodaira-san. So I'm Oki Matsumoto. I'm a CEO of Monex Group. I started my career in 1987 at Salomon Brothers. So for the first 12 years of my career, 3 years in Salomon, 9 years in Goldman Sachs, I was a trader. I started trading government bonds and those kind of things, and then later on derivatives, swaps, and all kind of options. And then toward the end of the career at the investment bank, I did distressed debt purchase, those kind of business. So I really traded from highest credit to the lowest credit. And after that, I founded my company Monex Inc. and Monex Group. That is online brokerage company in Japan. Started in Japan, but expanded to Hong Kong, United States, Australia. So now we have a kind of worldwide presence in the online brokerage business, as well as we have large crypto exchange business in Japan. So my company is doing both equity and futures business as well as crypto, and which is pretty big. And also I'm doing myself. I'm managing activist fund for the LPs. So I've been doing a lot of involved in the many aspects of the capital market business. If you see in the States or in Japan, the bond side and the equity side, distressed, and the brokerage side and the fund management side. So I've been really exposed to the various aspects of the capital markets. Very recently, we just de-SPAC our US subsidiary onto NYSE. So now I'm kind of user of those capital markets technology as well. So I'm quite interested in having a discussion today to talk about all those transformation of capital markets.
Thank you very much, Matsumoto-san. And activist fund of Monex Group is one of the hottest topic for us journalists as well. So next, please, Tashiro-san, please.
Good afternoon, good morning, and good evening, I guess. So I'm Keiko Tashiro. I'm the Vice President of Deputy President at Daiwa. It's an honor to be back. I was at the session last year, and I'm really happy that I am on the same board as Oki-san and Yuko Kawai-san. I've met them in various places. The last time, so when I used to head our U.S. operations, and I went to a jazz, I think, session with Matsumoto-san. And the last time I met Kawai-san was in London, and we went to a really nice bistro. So I haven't actually worked with them professionally, except for some aspects that I'll mention when I talk a bit about my career. So currently, I head Daiwa's international operations at all the businesses outside of Japan. And also I am the head of our SDGs initiatives. It's a wider version of ESG. And I was wondering why it's these four of us on this session. And now I know because of Kodaira-san's introduction, it's because we started working at the bubble era. I joined Daiwa in 1986. And one thing I should mention is that when I joined, people were buying foreign cars and golf courses, and they were buying land without even seeing them, or they knew they would never go. So when then people say that Japanese don't take risks, I don't think it's true. Japanese do take risks. And I think that's an aspect that maybe might come up later. So when I joined Daiwa, I was in investment banking. I've worked in Singapore, London, and New York. There were 6 years when I actually ran our online internet business and the call center, and that's the first time I met Matsumoto-san a long, long time ago. But I think right now my main business, because I couldn't travel for the past 18 months, was trying to promote the company's SDGs. And I think that's an aspect that is really important because unless the capital markets of Japan works, we can't finance any of the sustainable initiatives that we need to. So that's something that I'm very interested in discussing today. Thank you.
Thank you very much, Tashiro-san. And Oki-san and Tashiro-san and I, and probably Kawai-san, all are in the same generation. I mean, the bubble generations, one of the most aggressive generation in Japan. So next, Kawai-san, please.
Yes, that is true, Kodaira-san. I entered my professional career in 1987. So we are in exactly in the same age cohort, I'm sure. My name is Yuko Kawai. I'm currently a CEO of Japan Digital Design Inc., which is an affiliated company of Mitsubishi UFJ Financial Group, which is the largest banking group in Japan. And and as I said, I entered my professional career in 1987. At that time, I joined one of the American banks. At that time, it was, I would say, mid-sized American banks, but then eventually merged into JP Morgan in the end. And so during those bubble periods, which my fellow panelists have already discussed, I was doing I was on the trading floor. Did a little bit of the foreign exchange trading, and also joined the interest rate derivatives group, and then finally moved into the credit derivatives area. So have done many securitizations or the synthetic securitizations and credit default swaps themselves. And in the end, I ended up in dealing distressed assets that Matsumoto-san did. So they covered not as full spectrum as Oki-san did, but also various aspects of the Japanese financial markets in the bubble era. Then after 10-some years at the American bank, I joined the Bank of Japan, the central bank. I completely changed my career. But during those periods at Bank of Japan, which ran almost 18 years, the half of my time was spent again in the financial markets. So from the different aspect, from the public sector, from the central bank's hat, with the central bank's hat, I looked at the various developments in the Japanese capital markets as well as the global markets as well. Currently, I am running the company called Japan Digital Design Inc., which is an affiliated company of the banking group, and they providing I would say digital R&D services to the bank as well as the other companies in the group. What I mean by the digital R&D, our company has three core functions. One is the data. One is related to the data analytics, including modeling using AI. So data is the new oil in the market, and also not outside of the market as well. And also the other function I have, the customer experience design, which is quite important in discussing the developments of the capital markets. And lastly, but the most importantly, we also have the function of the IT engineering, which is also a very important factor in the recent developments in the financial markets. I'm quite excited and looking forward to the discussion. Thank you.
Thank you very much. It is very much meaningful to recognize that we are sharing the same memory of bubble economies. It is very much effective for us to proceed the first questions. I mean, how do you observe the transformation of the capital markets in Japan over the past 30 years. As I said, since the collapse of bubble economy in 1990s, there are many changes. So there seems to be many changes on the surface. Some deregulation have been done. We have seen some consolidation in the financial industries and some startups as well. So what were the real significant changes and what were not in the past 30 years? Could you make any comments? First of all, Kawai-san, please.
Okay, thank you very much, Kodaira-san, for the question. I'm taking this honor of answering first this difficult question. So let me start with the macro picture. What has changed? Of course, the real economy has changed in the past 30 years. Left-hand side chart shows the potential of the change, the progress of the potential growth rate in Japan. In the black line. So you can clearly see that from 85 to 90s and onwards, we see the dramatic decline in the growth rate in the potential growth. And if you break that decline into components, you clearly see that there is a decline in labor input, which means that there is a decrease of the labor force. The other factor, which is more dramatic, is the capital input. Of course, the bubble finance has burst. Therefore, we see less and less capital inputs to support our economic growth. And to the right chart, we see the CPI, which is the inflation, and we see in the early 2000. As well as the close to 2010, which is of course the global financial crisis after Lehman collapse, we see the deflationary period. So the real economy, the component of the real economy has quite dramatically changed in the past 30 years. That's factor number one. Factor number two, what has changed in the finance side? There was a significant change in the past 30 to 40 years. This is the picture. This is the graph to show the component with corporate financing. You see on the left chart in Japan, there is a very stable borrowing from the banks, which is measured from the banks in the blue, which is shown in blue in the graph, and you see a little orange, which is bonds. And you see gray, fluctuating gray, which eventually is rising up, which is the equity financing. If you see the right-hand chart, on the top, we see Japan from 2001 to 2020. That's 20-year worth of change. You see less borrowing in the bank, in the corporate sector, in their financing. Even though it is still very small in comparison to the US, which is the bottom graph, the gray side, the gray part, the equity financing, it has grown in the past 20 years. So that's factor number two. Number three is what has not changed in the financial world, which is on the investor side. So you see in the left graph that the household assets, especially the household, didn't change their behavior. So you see the constant increase of the asset size in the household in the past 40 years, but you see the dramatic growth in the blue part, which is the cash deposit, so the cash and deposit, which is the financial asset, the household asset held either in the form of the cash or the deposit with the bank. If you see the right-hand chart, which is on the top, again shows the Japan thing, which hasn't changed in the past 20 years. The individual investors are still heavily relying on the bank deposit and or cash. You see very small proportion of the bond investment as well as the gray part, which is the equity investment. It's so dramatic in comparison to US. The small size of the funds, the ETFs and so forth. So this is what has not changed. That's the fact number three. So these are the three very simple factors I would like to point out for the change or the no change in the past 30 years. So we see dramatic change in the real economy. We see the behavior change in the corporate side, the borrower side, but we see a very little change on the investor side. So I'm just I just throw these three factors into the panel, and I would love to hear what has been behind, and I'm so much looking forward to discuss the factors behind that.
Thank you very much. I agree that it is very much important for us to mobilize the household assets. But yeah, it is true that nothing has changed. So yeah, when I look at the situation landscape of investment banking industry has changed a lot since I joined the firm in 1988. At that time, there were four main independent investment banks: Nomura, Daiwa, Nikko, and Yamaichi. And Yamaichi has gone bankrupt, and Nikko has become the subsidiary of a large commercial banking group. So Daiwa is one of the few independent major investment bank in Japan. In this sense, I have been looking forward to hearing the comment of Tashiro-san. Please.
Thank you. So you say independent, and we are independent, but there was a time when it was mixed. So we actually went through a divorce, which is probably really unique. So to add to what Kawai-san just mentioned, I'd like to take it from a different standpoint. So things that really changed, and I think number one is that commissions have been liberalized. So from 1999. So that's a big change. It's changed how mostly retail trades, and it's changed the picture of our businesses, because we could just multiply how many shares would be traded and we would know what revenue would be, but that's totally changed. Another thing that's changed is how companies report their earnings. And it's just, I think in 1999, when companies in general started reporting consolidated, and they started reporting quarterly earnings. So before that, it was mostly parent company and also semi-annual reportings. So disclosure has, companies are more important. And also because of the internet, how we disclose has changed. When I was in investor relations in 1999, although the internet was being used, there was like a 12-hour rule, basically saying you can't trade for 12 hours after earnings. So we were not actually told that we couldn't put our earnings on the internet, because any individual might see it and mistakenly trade, and that would make them insider. So, I mean, it's right now, you couldn't believe it, but that was the situation only 20 years ago. So we've come a long way in terms of disclosure, but that hasn't affected how, as you mentioned, how retail trades. Another element is that interest rates that Kawai-san mentioned is so low, it's gone almost negative, it's zero. And that's sort of affected, that sort of has an effect on what products we can offer, because bond products in yen are very unattractive for retail right now. Although that shouldn't be the case, but that's the case right now. And that's changed. That might have an effect on how people approach capital markets products. Another thing that's a good thing is the introduction of the stewardship code and also the corporate governance code. So that's also making companies, hopefully, I shouldn't use the word attractive, because I think it should be given that companies are transparent. But I think in the past 20 years, because of the internet and because of the of what corporates are required to do, we should be able to communicate to investors more. Another thing that didn't happen was that is that the fixed income market in Japan has never really grown in a way that I think it should, because it's still a market that only has investment grade bonds, and that limits products for institutional investors as well. And also the element of the Bank of Japan and GPIF buying equity, buying ETFs is sort of, I think, screwing the capital markets in a way that for some people are hesitant to enter the Japanese capital markets, because because the Bank of Japan and GPIF are buying into the market without any a different view than your traditional private sector institutional investors. And I think that's something that needs to be addressed in order for the capital markets in Japan to become more attractive. So that's like a really short version of what I think has changed for the good and the better.
Thank you very much, Tashiro-san. We will discuss later about the risk appetite of Japanese investors. So next turn is Mr. Oki-san, Matsumoto-san. I think our Monex Group is one of the most successful internet business in Japan over the past 30 years. So would you make any observation on the progress of the Japanese financial markets in the over the 30 years?
Okay, thank you. I think, when you look at the all mechanism or rules of the Japanese capital markets, which are actually quite good. If I compare that with all those rules and everything with that of US, Japan's system is really good. It may not be as good as the States, but it's almost there. So it's a very good market. But somehow, as the Kawai-san said and Tashiro-san said, investors are not developed, and so something really wrong. And what I think that what's changed most in 30 years in the other capital markets are share price. They went up. And what didn't change in Japan for 30 years, share price didn't change. It went down and came back, but it's basically the same as 30 years ago. So if I think about that, it's not if you are Japanese or Americans. If you are even Americans who live in Japan for last 30 years, and do you think would they buy shares? No way, because share price didn't move. And if Japanese who live in the States, in the USA for last 30 years, would they bought the shares? Of course, because everybody around him or her buying shares, stocks, and they're making money. And of course you buy stocks. So share price move is a cause of the what happened to Japan. It's not a result. And so the why, so the share price move is actually, it's got a huge impact to the market. And why investors were not developed? Because share price didn't go up. So I think the people tend to say that Japanese household don't have high financial literacy. I 100% disagree with it. After the bubble, the share price tanked, rates went down, and the dollar tanked, and then the Japanese retail put all money after they put all the money with selling the real estate, because at the peak of the bubble, Japanese household sector was a net seller of the real estate, and they got money, and they didn't buy equity, they didn't buy dollar asset, they just bought the Japanese fixed income products, if it's deposit or the JGB, and that time it was yielding 6%. So actually, Japanese retail has got a very high, the financial literacy, I think. So why the Japanese share price don't go up? There's because of maybe because of the accounting, maybe because of the corporates don't have the enough appetite for growth. But this part is maybe the government kind of measures to think about share price are very weak. So this is actually the one problem that Japanese capital markets has got. But anyway, so I think the share price move is the biggest cause of all kind of bad things for Japanese capital markets.
Thank you very much, Matsumoto-san. Surprisingly, Nikkei's average is now below the historic high. Japan is the only country to see such kind of a disastrous situation of equity markets. That tells almost everything in Japanese capital markets. So in this sense, it is worth discussing the second question. What needs to be done so that the financial service and the capital market Japan will become active again? So this time, please start from Tashiro-san, please.
So I agree with Matsumoto-san to a certain extent, but I think because the market hit the bottom in probably 2011, I think, and it's gone up at a time almost 3 times. So and the situation remained the same. So I think one aspect is that people have lacked confidence or trust in the Japanese equity market for a few reasons. And I, as I mentioned at the beginning, and I don't think it's a lack of risk taking from Japanese, because they do take risks in maybe ways that they don't assume they're taking risks, which is also another problem. But it's not because Japanese don't take risks. And I think in order, what we need to do is that first, so that the people have confidence in the market, I think there needs to be more transparency of financial products. And that's part of our job as a securities companies, to be more transparent. And so people are confident about the products that they purchase. And I think it's absolutely necessary that we do that, because, as I mentioned, in order to finance, to build a sustainable society, we need to be able to finance it through the capital markets. And also another element, which is sort of in the middle, is the bond market, which is yielding 0, but still, I think we need to have mechanisms so that more companies, not just investment grade companies, can use the capital markets to raise funds. And I think that's an element that's sort of between equity and bonds that will help the market become more transparent and accessible. And I think accessibility is really important in that, and I think we might be discussing it later, because it's less costly to buy and sell equity and bonds in smaller units than it was before. And that will help especially retail investors to diversify their portfolio, which is also something that needs to be done, but we weren't able to do it when I started working in 1986. So, and also I talked about the Bank of Japan's ETFs, and the Bank of Japan needs to get rid of the ETFs in a way that won't affect the market that much. And I think one of the ways we can do it is to pay the politicians with ETFs. An idea. So that's it. Thank you.
Good idea. Thank you very much. So what do you think, Matsumoto-san?
Well, I think if you look at the Japanese corporates, the cash built up in the those companies, almost amount that could buy all shares. That is ridiculous. They are really swamped by cash. And the Tashiro-san, as regards how to minimize the shock of the BOJ selling ETF, I mean, Japanese corporates with using their internally built cash, it's only just a change. That the entire ETF position of BOJ is only a change of those cash built in, those publicly traded companies. So, by crossing this cash and the ETF position of BOJ, boom, it can go, disappear in a second. So I think, somehow those Japanese companies, you're keeping a huge amount of cash. They're not paying back to the shareholders, or they're not using them for the growth strategies. So that's really a problem. We have to mobilize those cash, and that because the cash doesn't make any return, So when you think about the ROE of the company, if they have an even good business, that ROE may be high, quite good, but there's no ROE on the cash. So in a combined ROE of the company can be very low. So that share price is very low. So this is to mobilize this cash is very important. So so to engage with those companies to mobilize those cash, either pay back or put them into the growth area, is really the key to change the Japanese corporates and the Japanese capital markets. And then, because as I said, share price is a cause of the problem of Japanese capital markets. So once by doing it, share price start going up, then many things will be solved. That is what I think. Tashiro-san said it is 3 times of the bottom, but still, it's just the same as 30 years ago. So it has to. We really have to think about how we can, raise the share prices, I think.
I think my point is that if they had bought at that period, it will be 3 times. That was my point, not that for the long time span.
I think it depends on the generations. The younger generation of investor will see how high is the Japanese stock markets compared with the bottom. But when we as a bubble generation could see how low Nikkei 225 is still below the historic high, it's ridiculous. So I think it depends on the generation. That's my conclusions. But anyway, so what about Kawai-san? How do you see? What do you think? What should we do to activate the capital market in Japan?
Okay, as a last speaker, let me try a different approach from to the 2 previous speakers. As I show in my graphs, the individual investors heavily depend on the deposits in their investment, in keeping their assets. On the other hand, corporations, even though they they kind of like are leveling the borrowing from the banks. I mean, they are like financing more in the equity market. So that means that the banks cannot enjoy the difference between the bank loans and the deposit. The interest rate margins between them, because there are not enough borrowers in the market. So banks are suffering from the increase of deposit, I would say. Why don't we approach from there? So as I said, my company at this moment is working in the financial group, in the banking group, and they're working in the project with the bank in order to introduce the bank clients to do more investments other than deposit. So we are trying to create a digital platform to introduce the various financial products in trying to meet the needs of meet different kinds of needs of the different generations and different the attributes of the investors or the bank depositors. So that kind of efforts, which is made from the incumbent banking side, which has been the keeper of the individual financial assets, may work, may not, but may work. So that type of making the UI UX the more approachable, more easy, more flexible for the potential investors. I really would hope that these efforts will bear some fruit.
Thank you very much. Digitalization is very much important. It relates to the question number 3. I mean, the market competition grow in the global and also Asian markets, because there are very much hard market competition is in the Asian markets, and Singapore and Hong Kong are going far ahead of Japan, and even in the content mainland China, Shanghai and Shenzhen are emerging, and some Southeast Asian countries, including, for example, Malaysia and Thailand, have shown the significant progress. So we are competing. Japan is competing with those markets in Asia, and there are 2 things in common in these markets competition. That is green finance and digitalization. Those are the two important factors, I think, in the to discuss the market competition in Asia. So how could Japan be competitive in these two fields? I mean, the green finance and digitalization. So may I hear a view first of all, Matsumoto-san?
Okay, so maybe this is really the question for Kawai-san because this is it's really her business. But I think you know with the with Web 3.0, with blockchain and those kind of technologies available, there are, I think, kind of new cyber nations are being created on the on the metaverse. Whatever you call blockchain, trusted network, or internet, trusted internet, or whatever. With blockchain, with the Web 3.0, there are lots of different cyber nations being created. So it's like it's not a Singapore versus Japan. There are in the cyber nations. Like Amazon could create, for example, huge cyber nation just internally in their ecosystem. So I think what Japan should do is not like just the digital securitization, something like that. More, Japan should try to create a new cyber Japan. For that, I think we need to create a Japan version of CBDC, central bank digital currency, and then try to really recreate, away from the physical Japan, to create a new cyber Japan. Japanese are very accustomed to the digital technologies, and we do have a lot of good technologies already up and running for that kind of systems, like the Suica, or there are the many kind of digital currencies being already available in Japan already, like the last 15 years. So that is something we should try to do. The green finance, Japan is Japanese, how do you say, the geographical position is very unique compared to the Europe or other part of the world. So that green finance rules seem to be made in those other areas. So I don't think Japan can really nicely compete in that area. So I think Japan should really focus on this digitalization, or to try to create a new cyber Japan in the Web 3.0. So that is the my kind of recommendation.
Thank you very much. It is important to recognize how growing they are meta markets, and actually Facebook has changed their name, Meta platforms, and they are trying to do for example, the financial services in their cyber space. So what about Tashiro-san? I think Daiwa is one of the big investment banks to emphasize the importance of Asian markets, and Daiwa has a strong footprint in Asian markets. So how do you see the market competition in the global sense, and also the Asian markets?
So to start with green finance, I think as Matsumoto-san mentioned, rulemaking is really, we're in the midst of rulemaking for green finance. And it's very difficult for Japan to participate because a lot of the rulemaking is already well ahead of, is already made, or is in the process of being made. And because of language barriers and various other things, it's really difficult to join. But on the other hand, Japan's still probably the 10th most populous country in the world. And also we do have financial assets that are laying in banks. And not just retail, but also as corporates and various other institutions have a lot of money that needs to be invested. And I think green finance, for it to be sustainable and grow, there needs to be liquidity. So if we could be a source of providing the liquidity, I think that even though we might not be able to make the rules, there is a role, a really important role that Japan can play to finance the future of Earth. And I think that's something that we need to be very mindful of, because currently I think Europe, the US, and Asia, including Japan, is in a very unique position, very different positions in terms of green finance. And I think we can play a leading role in Asia of how we can finance the sustainability of Asia. And that's something, a role that Japan definitely needs to play. But also in terms of the digitalization, I totally agree with Matsumoto-san in that we need to be starting in terms of, I think there's going to be legal implications, whether it's a good thing or not, or whether countries make different frameworks that the private sector can work on. We need to make sure that it's global, that people can act globally and not just within the borders. And I think that's an aspect that maybe Kawai-san thought of when she was at the Bank of Japan. But it's something that we need to be at the front of in order to play a major role in digitalization. So that's my take on those two topics.
Well, thank you very, very much. And digitalization is critically important to activate the Japanese capital markets. So it is time for us to welcome the comment from Kawai-san, please.
So much pressure on me. Okay, so first of all, digitalization. It's needless to say that digitalization is required not only on the capital markets development, but also like in every aspect of social life. What is the hindrance in Japan? Data, the privacy, I would dare say the complicated discussion about privacy, about data, usage of the data. It's not really like if you want to like enjoy the digitalization, you need to give up the privacy. It's not like that. But sometimes it's discussed in that way. So first of all, we need to more openly discuss about the data and privacy and usage and benefit of the data owners, which are ourselves. So that's one thing I really would like to stress in developing like digitalization, not only in the finance context but in the social context. That's first. Then in the green thing, it's again the same. What I see in the green market this moment is like a little bit of the bubbling on the green finance. And as Tashiro-san said, that we have like abundant money, which are readily be invested in the good things for the good things, and greening the things, or the greening things. Of course, is one of the good things. But having said that, we again are facing the lack of data here. The reason why like there is a little bit of bubbling in the green finance, I would say like there is a lack of data, so that we really can't judge what is what on the what is the proper price for the risk kind of thing. So I say well, I have many dreams, and I think that there are good developments recently in Japan. But we really need to think about the data utilization and the protection of privacy in order to promote that.
Thank you very much. Maybe we could need more and more time to discuss about this topic. I mean, digitalization and green finance, but unfortunately, time is running out. Anyway, thank you very much for this opportunity, and I hope the discussion here today will give some useful insight to all of you to participate here. Thank you very much.
Thank you.
Thank you.
Thanks.